Okay, everybody, here we go. It is me, Gregory Mannarino. Tuesday, May 9th, 2023. We have a lot of stuff here to talk about on this lovely pre-market report. People, let's start doing that. Let me start off with this. There's a lot of talk about a potential U.S. debt default, and I think this threat is very real. I would not be surprised. I'm gonna just throw this out here real quick. What do we know must happen before the rollout of the new system? Well, a crisis of epic proportions that would hit the financial markets. Now, I'm not saying this is a lock, but I think there's a 50-50 shot at least that a debt default will occur here. There's supposed to be some meeting of the minds today, meeting of the brain dead with regard to this debt ceiling issue here. We'll see how this plays out. But all right, let's just put a scenario out here. What would it mean? You know, a debt default, a U.S. debt default would have far-reaching ramifications here. But if we just focus on one thing that I talk about all the time, how it would affect the stock market, I'm going to tell you right here and right now. If in fact there is a U.S. debt default, the stock market would fall by a third in one day. If this lasted any length of time, if it got drawn out, let's say a week or two, the stock market will lose half its value. And that means that people would get hit pretty damn hard. This would play out to be a big crisis, and it may be exactly what they're looking to do here. So again, we'll see how this plays out moving forward, but it wouldn't shock me. Would it surprise you? That's the question of the morning. Would it surprise you to see a U.S. debt default? I'll tell you something else. The market is not pricing this in at all. There's a couple of things here that the stock market is not pricing in. One would be a debt default, obviously. Market doesn't believe it's going to happen. I'm not saying it is going to happen, but I think there's a strong possibility, about a 50% chance, that there will be a U.S. debt default, and it's going to hit the market very, very hard. Of course, that's going to hit people too in their pocketbooks. It would be pretty interesting to live through something like this. Number two, that's number one that the market is not counting in. Number two, this market is pricing in, at least in my view right now. I honestly, people, look, I'm not tooting my own horn here, but my record for calling the Federal Reserve, I don't think there's anyone better, honestly. I've only been wrong like 3 times in well over 10 years. So let's talk about what's not being priced in here. This market believes that we're going to get a rate cut over the summer. Okay, June, July. A lot of you have written to me believing that a rate cut is coming sooner than later. It's not. Okay, the Fed is going to keep the pressure on the middle class. In fact, increase that pressure on the middle class. In my research, what I ponder constantly, the absolute earliest that we would get a rate cut from the Fed, September. Okay, I'm going to go out here and say September, but the market's pricing it in sooner. So this market has a few things weighing against it right now. As we all know, there's a black hole here. There's a black hole, a vacuum underneath this stock market. Speaking of that, stock futures right now are lower across the board. Nothing major, but lower nonetheless. Let's see how this plays out here. It's very possible, and I've said this a bunch of times already, that this market is going to end the month much lower than we are now. Okay, that's what I see here, right or wrong. I tell you straight out, I am betting, literally, that this market is going to fall here. But again, I'm in a very hedged position here. You know how I play the market. I'm in a lot of things here. I'm long, very long, the market with regard to ticker JEPI. I am short one thing. That's ticker SPY right now. You know how I'm playing JEPI, people. I keep getting questions and questions and questions and questions about I am not selling this thing, any of it, until we see the debt market implode. All right, and even then, I'll consider what to do here. I'm looking to buy more of this stuff for as cheap as I can possibly get it. You understand? And that would present a major opportunity, in my view, but we'll talk more about that later. So let's go back to this freak show of a stock market. Stock futures are lower, as I said, pointing towards a lower open, trading to the start for 40 minutes exactly from the time I am doing this lovely video blog. The regional banks, okay, they're getting spanked this morning. It's an incredible thing. Again, what are they doing? It's that they are trying desperately to instill a sense of confidence in the system. I covered this yesterday at length in my post-market video. It's a confidence game. It's a con job on an epic scale here. Pumping these smaller banks here with billions and billions of dollars. We have no idea what's going on. Understand what happened here. We got one source, Investors Business Daily, that even reported on it. They were probably told not to do it. Again, look, the media is controlled. Who controls the flow of information that you're allowed to know? It's the central banks, okay? The central banks control the media. The central banks control the economy. The central banks control the financial markets and the financial system itself. They are the government. Everything else, the Bidens and all the other freak show, it's a freak show. It's a sideshow. That's all it is. Your votes don't count. We have no voice. We have no representation anymore. Everything is going exactly in the direction that central banks want it to go. They're bending and twisting the whole system in that way. Part of it is these unbelievable distortions that exist across the spectrum of asset classes, and this is all going to get real at one point. It's all a setup here. So what we got this morning, as I said, futures lower, regional banks selling off pretty good, stock futures lower. Okay, did I say that already? Okay, we got 10-year yield steady-ish kind of right now, 3.5 on the 10-year yield. Everyone keeps asking me about this issue with the short end of the yield curve. People, I told you already. I'm going to tell you, fear. When you see action like that in the short end of the, with yields surging like that, it's fear. We're going to see the same thing in the longer end of the curve. This whole thing is going to eventually turn around. Okay, this rate suppression scheme that's been going on since the last meltdown is all it's done is inflate a massive stock market bubble, a massive real estate bubble, and again cause malinvestment, cause distortions across the spectrum of asset classes. No surprise here to you or me. Okay. What else is going on here? You got cryptocurrencies catching a bid this morning. Gold and silver mixed, but relatively flat here. Crude oil under a little pressure, had quite a run up as of late. That's it. That's the markets. That's where we stand. But the real question, I want to hear from you, okay? Do you believe that they're going to allow a debt default to happen as the crisis, which they need, again, as a bridge to the new system? So it's very possible. Like I said, I'm not saying I'm dead in the middle with this. I'm 50-50 right now, and maybe some of you can sway me as to which way you think it's going to go, so it would get me thinking here. So me, I think there's a 50% shot of a debt default, and that would rock. This would send a ripple effect around the entire world, and global equity markets would take a massive hit. First day, at least a third. This market will drop a third in a day, 50% in a week. And if it goes on longer than that, I mean, we could see Dow 6,000. And I think we would also see the debt market respond in a very negative way. The same way that the short end of the curve is selling off, you're seeing yield spike down there. We'll see the same thing with regard to the 10-year yield, and this whole thing will get very real very fast. So just be ready. Be ready for anything. Be ready for anything. Always have the high ground, people. You know this if you follow my blog. All right, people, that's pretty much where we stand. That's it. I'm going to end this video blog now. Again, please comment. I'm so curious as to what you think is going to happen. Do you believe we're gonna default? The USS for the first time ever is gonna, well, we're already in a technical default. If it weren't for the Fed buying everything, printing cash out of thin air like this, we've already defaulted technically, but we'll see how this plays out. So I want to hear from you on that. Number 2, please, thumbs up. These thumbs up are so important. I can't tell you how important they are. I covered anything you find interesting, you like my work, thumbs up, please. Please share this stuff. Get it out there. And I will see all of you at the end of the day for my live stream, 1:05 p.m. Pacific Standard Time. This guy here loves you a lot from the heart. I mean that with all I got. All right? I will see you later.